Okay, good afternoon, everybody. I'm Andy, and welcome those who just joined us. Very good afternoon to you. And we are very grateful to have this space by IES to support this activity. Okay, I'm Andy from IES INCA. Those who have not met, I will do a short presentation about our organization, IES INCA, and then we'll get our friends from ACE to also share a bit about themselves, and then we will have our four speakers to share about their area of expertise in financing or fundraising, funding companies. So we have Sam, we have Marcus, we have Lance, lastly we have Daniel. So you're coming in. Hey, hi. Welcome. Thanks so much for the place. Okay, so I'll begin. Okay. So my organization is IES INCA, but I need to tell you about IES first, because that's the IES part of IES INCA. IES is the Institution of Engineers Singapore, which is the national body for engineers, and it's been around since 1966. And we represent engineers, and we help to uplift the profession of engineering in Singapore, and help to be the representative voice of engineering. So for IES, we actually started IES INCA, which is what I run. It stands for IES Incubator and Accelerator. The role of IES INCA is to help technology entrepreneurs, investors, mentors get connected and to support and build sustainable and growth ventures. Yeah, so that's what we do. Okay. That's our mission, to support our engineers who are building these tech ventures to be able to accelerate their products to market and to be successful. And in doing so, we hope that we can have a vibrant engineering venture community that can really transform life with the technology they bring to market. So in our work, we work with IES members, engineers, corporate spin-offs, as IHL spin-offs, and we provide them with engineering translation support, mentorship, business support training, and also fundraising support. We connect them to investors, business network, and customer and new markets. And we support them in their growth through this incubation and acceleration program that we run. Okay. We also work with corporate SME who have problem statements, industry problem statements, and also industry innovation opportunities to put in front of engineers who love to solve problems. So we hope that through that way, they can find new businesses that they can build and build strong Singapore brand companies. Okay. So what we actually do is companies that have done their customer discovery validation, they have MVP, looking to scale up. That's where we can come in with our program, and they exit incubation once they have the funds raised and also an executable business plan. It's not just enough to have money, but you have a good plan, a group, well-structured plan to execute, to be able to reach the business goals. Okay. So these are the areas of technology we focus on: infrastructure technology, built environment related building materials, processes, facilities management, IoT for industrial purpose, smart city, robotics automation, and sustainability. These are the areas of technology we focus on. And these are some of our partners that we have worked with. We don't have a fund ourselves, but we are happy to work with investors, whether it's angel or VCs or corporate investors, to be part of our network. Whenever we have teams that are fundraising, we can introduce and connect. Okay. And in 2023, we started on 2 new programs. One is corporate innovation. We wanted to help engineering companies who are bigger, SMEs, large local enterprises, MNCs, in their innovation journey. So we have 3 consultants to advise in this area. And then we also started on overseas expansion programs. Companies who want to go overseas, we can help them to reach USA, Southeast Asia, China, and so on. These are our 3 corporate innovation consultants. We have Ming, Jeremy, and Randall, who are helping. So if you know any companies in the engineering space who want to innovate, want to grow, right, feel free to talk to us and we can link them up. Okay. So that's a very brief introduction about IES INCA. We are here to support engineers who are and technopreneurs who are trying to scale up their business. And very happy to welcome all of you to this event today to learn about medicine. Okay. So that's me. Yeah.
Okay, thanks, Andy. Nice to see everybody here. I see some familiar faces. Nice to see you all again, and even nicer to see new faces. so that we can talk more about what ACE does for our startup entrepreneurs. So like what Andy has said, I'm Kevin, I'm from the Action Community for Entrepreneurship, ACE.SG for short. We rebranded from ACE to ACE.SG since June this year. And what is our role? But before that, this is our board of leaders. Some of you may know that we started in 2003, which makes us 20 years old this year. And of course, Mr. Raymond Lim was our first chairman. And fast forward to 2014, ACE.SG was relaunched as a private sector-led. However, we still retain our status as a non-profit organization because we are very clear in what our mission is. We are here to basically help the startup founders to scale. And fast forward again to 2020, our current patron is Dr. Tan Seeling. Most of you probably will know who he is. Minister for Manpower, as well as Second Minister for Trade and Industry. Okay, so what does A stand for? So A basically stands for advocate for the interest of the startups and members. C, to catalyze innovation and collaboration among the ecosystem players. And of course, E, to enable capability and capacity building effectively using the resources that ACE has access to. So this is our current board of directors. Some of you may find some of them familiar, some may not. Have a look. Our chairman is currently Mr. James Han. He's also the director for Quest Ventures. Some of you may be familiar with him. And you can see all of them, we have a wide variety of representation from the different sectors that ACE represent. So other than James, who is a VC himself, we have Dr. Goh Mansong, who is from ITV, as well as Muhammad Nasser, he's from SGX. Then I think you probably will recognize Marcus Tan, he is obviously the founder of Carousel. Yeah. And then Jeffrey Kyong from Sept. So these two are actually unicorn startups from Singapore. So these are the 5 key pillars that ACE.SG focuses on. So obviously at the top is startups. All our programs are curated to cater to the demands and the needs of startup industries. And secondly would be the public sector. Even though we are non-profit, we are still largely funded by the government. And ACE acts as a bridge between our startup founders and MTI, whereby we conduct monthly roundtables for our startup founders to share their success stories. They can share with us some challenges, what issues they face, and we will surface all these to MTI for the next legislation review. Corporations will be looking at the likes of Microsoft, Panasonic, for example. These are our corporate partners, where we actually work very closely with them to provide a common platform for our startup founders to showcase and exhibit their products and solutions. It can be in the form of a webinar, seminar, it can be a demo day, a pitch day, and we have recently also done a reverse pitch, whereby we have corporates who actually came down and they actually pitched to the startups, soliciting for solutions to the startups. Next, we have risk capital, or I think what we commonly call it funding, meet the VCs. So ACE also has our portfolio of VCs, family offices as well, both locally and overseas. We are looking at about 100 to 150. And on a very regular basis, we are always curating VC joint ACE. And of course, my colleague Jae Woon, she handles the VC type. So you can actually connect with her later on. Last but not least, Institute of Higher Learning. So ACE actually connects very well and very deeply with all the institutes of higher learning. We are looking at the likes of SMU, NTU, NUS, SMU, as well as SUSS, CPD, as well as all the polytechnics and ITs. For them to come together and showcase their innovative solutions. And this usually culminates in our National Youth Entrepreneurship Awards every year, where we invite the schools to submit nominations for students who excel in innovation and entrepreneurship. And this year, it will take place in November. So those are the 5 pillars, and just very quickly, I'll run through. Fundraise is basically a word thing for fundraising. Which is a quarterly event that ACE.SG hosts. So it's a closed-door event for our startup founders to meet a panel of VCs. It's very casual, informal meet and greet session where they will get to interact, engage with one another, so that the VCs and the startups will have the opportunity to find out one another's needs. And of course, needless to say, we have ACE, not extreme membership that we encourage startup founders to join us. But of course, having said that, our portfolio of startups, primarily, most of them are bootstrap startups. So this is why ACE programs are actually very price-friendly in that sense for any programs that we have charged. Because we're very mindful that bootstrap startup founders, obviously, funding is usually at the top of their mind. And any money that they can save, they would try to save. And this is what the annual fee. Of course, as an ACE member, there are certain events that only members have access to. One of it is fundraise, which I mentioned earlier. The other one is our Global Ready Talent Program, whereby it will give you access to a pool of interns, and you can get up to 70% funding from Enterprise Singapore. And of course, the last one will be mentorship. So I think similar to IES, we also have a pool of super mentors who will be able to help our startups in areas of needs. And lastly, these are all our social media handles. We hope that you can connect with us. Any questions or any inquiry, we will be here, so you can speak to Jane Woon or myself later on after this. Okay, thank you very much. Okay, thank you.
Okay, I got 10 minutes. Hi, I'm Sam. I'm not actually going to take 10 minutes. I'll probably only take 5 minutes of your time. I don't have any slides. But so for myself, I'm originally from New Zealand, been here for about 13 years, been angel investing in the region for about a decade now. Actually, I was previously heading up Endeavour Ventures, which was a seed stage sector agnostic fund, and now currently running Resolution Ventures, which is a seed stage fintech fund focused on Southeast Asia generally. The only thing that I really wanted to say when thinking about venture financing generally, and the hardest sticking point that I find when I'm talking to companies, is that realistically you need to be a high growth company. So you need to be growing over 10% month on month, not more like 20, maybe 30% month on month, and also have a relatively low marginal cost of revenue. So if you're building widgets, it's probably not going to be a suitable business for venture financing. It is going to have to be something, and this is why the fintech space is actually quite good for venture funding, because generally once you get to a certain level of scale, you can continue to grow that business without needing additional capital. Right. And that's actually all I have to say about it. I mean, as a fund, we're generally writing 250 to 500K tickets in rounds that are pre-seed, seed, maybe even Series A. I don't know how you want to define those terms in this market. In different markets, you're going to have different definitions there. I'd always define a Series A as being around where there is actually a Series A preferred share. The pre-seed seed is a little bit more difficult to define, but for us, we're generally investing in businesses where you've got a couple $100,000 in revenue going on $1 million, $1.5 million in revenue in the 12 months that we're investing. So it is a real business that has been validated by the market. And that capital, the venture capital that's going in those kind of businesses is really going to be helping them to continue to grow and do the things that they've already been doing. If you're looking at capital at an earlier stage where you don't have a product in the market, then typically you're going to be looking at and talking to angels. And that's it. I think I've still got 8 minutes left.
We'll save it for the question for Sam later. Okay, thank you, Sam. Okay. So next we will invite Martin Quek of Validus. Okay, Dr.
Hello everyone. Right, so I'm Marcus. I'm heading strategic partnership with Growth for Validus. So I think it's a very solemn crowd, so maybe let's have a bit of participation. How many of you have heard of Validus before? Raise your hands. Great. How many of you, are very into this kind of new topics like how AI, alternate data, how are they helping the lending space? So guess this is newer topic, so maybe not as well known yet. Yeah. So let me share a bit more today, on what is debt financing, what's crowdfunding, what does Validus do, and as well as how we're using things like AI, alternative data, so-called do things differently in the lending space. Okay, go. Okay, is it moving? Yes, okay. Okay, got it. Okay, it's blocking my camera. We have a very giant mouse clicker there. Okay, so first thing, what is debt financing, right? What's crowdfunding? Basically, I think most people should know, right? Basically, businesses are getting money from either high net worth individuals, institutional investors, or maybe even the balance sheet from financial institutions like us, right? And it's basically over a period of, let's say you set a preset tenor, preset interest, then you just make money from this. Bullet installments, whatever the structure. And at what stage should the company be suitable for this? So I'm told that other speakers who are doing just the VCs, right? So you'll be wondering for debt financing, right, who would be suitable for this? Basically, it's actually any company at any stage. Unlike my peers who probably are targeting specific sectors, for us, debt financing can take it anytime. But what are the advantages for debt financing compared to other forms of finance? Of course, the main key thing would be you don't have to dilute the ownership. If you were taking it with any VCs and of course, you share a bit of ownership with them for the answer to invest. And you will probably take a longer time as well. Debt financing is simple, right? Borrow money, you pay money with interest. Considerations: are you able to handle the money installments? Are you able to handle the interest expenses? If yes, then it's always a good thing to pick it up. Okay, so what are some constraints that SMEs over here you may face when taking up debt financing? Right. First of all, of course, when you are dealing with banks, there's always very lengthy turnaround times. I used to come from a bank, take probably 2-3 weeks just to get a loan. So I will see the credit manager over there struggling, looking at 2 years worth of financial records, looking at 1,001 different ratios to calculate things that to the SME they are thinking, hey, this thing already happened 2 years ago, 3 years ago. Why are you still looking into that? Right? You should be looking at things more forward, right? Currently, what are some data you have? What are some things that can show the actual business growth happening now, rather than things 2 years ago? Stricter collateral requirements. Probably not. If you want a large loan, you probably have to in some collateral pledge or commercial property pledge or car, whatever it is. For newer fintech, they probably say, okay, unsecured, you don't get any of it. And typically, SMEs would probably also may not need a loan that is as large or as long. However, for bank, they will say that, okay, let's do a 3-year tenor or 5-year tenor, right? And they'll lock you in for that period of time. Maybe you only need 1 year, maybe you only need 50K for 5-6 months. It could be the bank is telling you, no flight, 3 months, you can take 50K for 2-3 months. Right? For us, what we can do is, of course, to provide SMEs with their preferred amount, say maybe even 10K, 20K for a shorter period of time. Next thing, expensive financing for alternate finances. So for example, let's say you're looking at money lenders, I'm looking at loan sharks. Then of course, the interest rates are going to be much higher. So these are the constraints that SMEs face. And how the new technologies like AI, alternate data, how are they revolutionizing the space? Right? So first of all, AI-powered credit assessment. So when banks take weeks to come up with a decision, using AI, immediately we can compute. We have an algorithm in place to make sure that immediately within the system, yes, yes. How much? Everything generated. No, rejected. As simple as that. There's no need for one human that they're staring, calculating ratios, and tell you at the end of 3 weeks, sorry, we rejected. Next, personalized loan offerings. Right. So with data comes power. Right? When you have a lot of data, when you understand the SMEs better, you can then make personalized loan offerings. So for example, I know how this SME usually, what is their business cycle like. So before the time where they require the funding, I can preemptively already say that I'm going to offer you a pre-approved loan of 100,000. And then for the SME, they can straight away say, oh yes, you understand me well. This is exactly the period of time where I have similar needs where I need the loan. Without applying for it, it's really proof of. So this is what you can do. Next, of course, the first two are like swords whereby it helps the SMEs, but there's also the shield portion where it helps to protect finances like ourselves. So real-time risk management. with AI, alternate data, what we can do is always keep track. We are always aware of when things might go bad. Then maybe we can proactively reduce credit limits, and this will help to ensure that the financer also have an overall lower non-performing loan ratio that will in turn allow us to provide lower interest rates for everyone. Next, exciting one, embedded finance, right? This is the new key one. So it's how you can make banking invisible so far. Right? So maybe let's say you are Shopee merchant, for example. So you do a lot of selling on Shopee. Shopee will probably have a lot of data of you. You know how much you sell exactly. More so than what the financial statements can show you. What if you can imagine a scenario whereby immediately on the Shopee app, there's a button there, oh, you want to take out a loan, we pre-approve the loan for you. Without submitting any other documents, click yes, also that will learn your contract. So these are things that can be done when different strategic partners come together to integrate for an embedded finance solution. Any quick questions so far? All good? Okay, moving on. Now, to tell you more about Validus, right? Who's Validus? We are Singapore's #1 SME financing platform. Right, so we offer SMEs with business loans, business accounts, cards. Licensed by MAS, headquartered in Singapore, but also present in Vietnam, Thailand, and Indonesia. So far across the region, we have disbursed 3.8 billion worth of loans. Okay, and these are our backers. The largest backer is Vertex Ventures under the Master Service. And then recently we closed our Series C1 round also, where we have strategic investors from Korean and Japanese. Okay, yeah, and every year, of course, there's some awards, and the recent one that we won is the Singapore Fintech Festival one, where we're awarded for our auto working capital loan. Over there, you can see SFS people together with my founders, Vikas and Michelle. So, just now the whole talk about AI, alternate data, how is vendors actually using this to benefit SMEs? Right? So, we are leveraging AI data analytics, whereby we design a proprietary algorithm for a lot of things, loan origination, underwriting, and risk management. So how does that benefit SMEs? Right, we are able to give a lot faster loan approval. Right, we can disperse the loan within 1 day. Everything is auto-completed in the system. You don't have to, manually go and look through, make sure whether we want to decide whether to grant a loan. And through all of this, we are able to offer lower interest. Next thing, how we utilize alternate data and embedded finance with strategic partners. Right, so loan application becomes very easy. We don't have to take a lot of documents, unlike what banks do, right? And then we also are able to provide a higher loan approval quantum because we have more data. We are able to so-called reduce the risk and therefore provide a higher loan quantum. At the same time, we can also give value-added ecosystem options. So the whole thing about embedded finance that I talked about just now, and we even work with strategic partners like TikTok content creators to provide like free social media marketing for our borrowers. So we not only help to give loans to them, we also help them to grow their businesses. So a very quick case study. I'm not sure exactly how many of you are engineers here. I'm told that it is an engineering society thing, so probably a lot of engineers here, right? Engineers, raise your hand. Okay, so not a lot. So maybe they are thinking about different industries. Right, but we do have a case study from a customer in the engineering industry. Right, previously they have to spend many days, settling all the different documents that the banks want in order to apply for a loan with a traditional bank. After 3 weeks, the answer is sorry, no, we can't provide you, and that resulted in a loss of opportunity for them because they were unable to bid for. Eventually, they were told that their financial statements were not very ideal. But the argument to them is that is 1 year ago. Actually, right now we are going very well. But still, the bank just rejected them. And then after they discovered Validus, they submitted minimal documents. We are focusing on the present strengths instead. And they took up 2 products for us, invoice financing as well as working capital loan. So for invoice financing, we work with a lot of key strategic partners such as SMRT, ST Engineering Capital, whereby we help to fund their supply chain. So if you have invoice to, let's say, SMRT, for example, it may take 3-4 months to pay back. Pass invoice to us, immediately we can give you advance payment from it. Yeah, and then simple working capital loan whereby everything is approved and disbursed in 1 day as well. Okay, so I come to the end of my topic. So please scan this QR if you want to obtain a free credit assessment or just to find out more. And we have an event exclusive promo whereby anyone here, if you are taking up a loan with us, what we'll do is we'll give you $88 cashback as well as our free social media marketing package. So yes, I'll give you all 2 seconds. Please scan the QR code. Thank you.
Hi everyone, thanks for ACE and IES for organizing this, and thanks like BBCD for being the supporting organization. So I'm Daniel from findalone.com. Findalone.com is Singapore's first loan marketplace. We are a relatively young company. We are funded by Singapore under the Startup Founder Fund. Okay, so right now, nowadays, there's a lot of business in India. I'm sure you travel all the time, maybe renew your car insurance or whatsoever. We realized that you can just go one portal. Like 10, 20 years ago, if you want to, let's say, buy insurance or you want to buy an air ticket, you have to go to the respective website one. Nowadays, there's marketplaces, there's aggregator, you can find all in one place. But when it comes to loans, you still have to submit an application again and again and again. Each lender want to speak to. So this is a marketplace where you only need to send up your application once, and then all the lenders will be able to speak to you on the platform. So that means you don't have to go through all the process again and again. In fact, this problem was supposed to be tackled by brokers. So brokers, loan consultants, they're supposed to have to find a loan whatsoever. But during COVID, we realized that I was previously a broker myself, so I decided to disrupt myself. Okay, so but that is where I saw a lot of my peers taking the chance of profiteering. You know, you could qualify for a loan, they tell you, boss, your loan very difficult to do. I think you need to give me higher broker fee. And all of a sudden, oh, I line up 3 vendors. So we decided there has to be a more transparent way to kind of the middleman speak to the lender direct. We have one platform that can connect to all the platforms so that all lenders speak to you, can speak to them all in a single one place. You have some RM like you to email them, some RM like you to WhatsApp them, your accountant email you something, your finance guy WhatsApp you something, all your information, all your document, all at different place, your term sheet, your loan agreement, all at different place. But right now, when you use our platform, you can do it all in one place. Okay. So I think what I would really like to share also is I think that is actually a little bit more than just looking at the cheapest interest rate. I think most of you here are business owner. 73% of business owner have been surveyed at a loan. So I think this is something you probably want to know about. I think a lot of business owners tend to just go for cheapest interest. But if you look at other things like, for example, repayment terms, how the interest is calculated, if there's any processing fee, annual fee, membership fee, these are the things that lenders typically have to embed, put it in a way that you tend to overlook. Like for example, 5 to 6%, most of us would say 5. I don't think anybody would say, my business is damn good, I will gladly pay 1% interest extra. But if you look at sometimes the small fine print, you look at 1%, you realize for a 20,000 loan, 5% is actually more expensive than 6% if you add in the processing fee. So things like your tenure definitely makes a difference. If you have a long-term loan, then a 5%, even with the processing fee, will be cheaper. Okay, of course, there's a little bit more that goes into this, like how the interest is calculated. Even when they say per annum, that is actually other things like how you compound it daily, monthly, or just flat 1 year. So you can still express a daily compounded as per annum. These are small little things that our platform hope to change through demystifying through our blogs. We have a dashboard when all the lenders actually respond to you. They are neatly displayed in the dashboard so that it's very clear. Make it as a business owner, whether you have a CFO, whether you have a private banker, whether you have an accountant, doesn't matter. Very important for you to access finance. Number one is being able to contact multiple lenders at the same time in one application. Second is how the information. Different banks use different jargon, different lenders use different jargon. Don't have to worry about all that. Using our platforms, everything is the same. Okay, and I think business owner, one thing you all want to know is, of course, where to get the different type of finance. Therefore, we have lined up all the various figures from all the various finance background, VCs, angels, crowdfunding and whatnot. But if loans is something you want to look at, I think it's probably helpful for you to understand first how lender make the assessment, and therefore how you can help to get yourself a better loans. Okay. Of course, like our earlier speaker, AI, more data can make your assessment quicker and whatnot. But fundamentally, there's still 5 things that they look at, which is character, capacity, capital, collateral, and condition. So if you understand these 5 and you know how to make yourself prepared, there is a better chance of you, getting your loan either approved or at a better rate. Okay, so what is character? Character refers to your reputation. Do you have unpaid bills? A lot of people wonder, like, why is I get rejected by the bank? My company is making money, whatnot. But when you get your credit report, then you realize 6 years ago you forget to pay a phone bill and whatsoever. Telco forgot to leave it out. Your credit score is low. It seems like you are a bad paymaster. You don't pay. Then the lenders will find this as a cause for concern, and they might be hesitant to lend you or charge you a higher interest rate. Of course, nowadays there's a lot of lenders who use alternative data to supplement this consideration. So by the end of the day, it's the weightage. Your character is definitely something they are concerned about. It's just like your friend, you go gamblers all the time, go nightclub all the time, bad character, you definitely want to lend to your friend. Okay. Second thing they look at is your capacity. So that's why when you apply for a loan, you send your bank statement, your financial statement, your NOA, everything, you send it again and again and again. Or worse still, don't even compare. If your friend says that you got a cheapest loan for OCBC or EBS or whatsoever, and you just follow him. But that applies to him doesn't mean that applies to you, because everybody has their individual score. So capacity, I think, is one area that a lot of business borrower neglect. Okay, a lot of the time they don't follow very proper accounting standard, invoicing standard. I've seen a lot of people who apply for invoice financing. They submit invoice that says cash due upon delivery. So invoice financing is basically an advancement of your loan. That means someone, let's say SMRT, is going to pay you 60 days later. I advance you the money now. But if you don't even put the 60 days, you just put cash upon delivery, then you can't access. So other things like is your ARAP. A lot of business owners make this mistake. They doesn't prepare their ARAP on a monthly basis, things like that. So it's very important for you to, number one, download your credit score, CBS statement from time to time. Make sure that you don't have anything you miss out. I mean, for the pure sake that nowadays there's so many people who can open fake account, fake credit card for the purpose of preventing scam. I think you should download the credit report once in a while just to make sure that you don't have any credit card unknown bill that you never knew that you didn't pay, and then that affects the credit score. I think second thing is you want to speak to your accountant, make sure that there are certain best practices, certain accounting standards that are in line with how you invoice your customer. Way you invoice them certain standard. That doesn't mean that if you don't follow this standard that the bank will check you, but like I said, when they assess you, the harder it is for them to assess you, they need a certain amount of margin, and they will probably try to charge you a little bit more expensive. Okay. And next thing is capital. So Singapore, with the joke, you need to prove you don't need money before you can borrow money. So capital is for you to show what are the assets you have. Prime lender, such as the banks, typically don't need you to prove your capital. Meaning that you have to show what are the assets, how many property you own, your investment, your unit trust, and that's your insurance. Typically, is subprime lender, non-bank lenders, when they look at it. Because for the banks, they would prefer to usually reject you outright if you don't fit their file. Because it's just not worthwhile to go after your personal asset. They still have to get a lawyer, they still have to acquire your property and after that liquidate it. Subprime lenders, the one that usually charge a little bit more expensive. Non-banks, typically they will look at your capital, especially if your profile is not as attractive. So a lot of business owners also tend to neglect this. They think that my business, I just need to have my books in order. But in Singapore, every business owner almost all the time would have to be a guarantor on the business loan itself. so that the bank or the lender, if something goes wrong, they can go after you. You cannot just close a private limited, bye-bye. So this is the reason why you also typically are a minority shareholder. That's why when you go to the bank's website, apply for a loan, they ask you a question like, are you majority shareholder, super majority shareholder? Because you cannot have someone who make a decision on behalf of the company and borrow in the company capacity. So this is where they tie you into your personal capacity. So a lot of business owner, even you have good accountants, you take care of your books, you don't understand your personal capital. So these are the times where you probably want to talk to your RM, the financial advisor, prepare your statements, so you can easily show your assets in the event that if you don't qualify for a prime loan, you still can go to subprime lender. So when you find the loan, it doesn't matter because all the lenders are there. You just click whatever you want, and you can just send it to whatever you want. Okay. Another thing that you want to look at on how to get a cheaper loan is probably collateral. So this working capital loan, I think it becomes so popular for its own good. Working capital loan is actually a scheme, it's an initiative, it's a need, it's not actually a loan product. It's just like, for example, you want money to buy a car, you can sell your house to buy a car and make a car loan thing. Okay, so collateral, sorry, coming back to working capital, what I'm trying to say is there are actually many ways to get financing, different type of financing channel, but with loan itself, there are different type of loan types available. If you have properties that is reputable, valuable, of course, you can put up as collateral. That will also help you as a business owner on how to reduce the interest they may charge on you. If you can prove that you have something valuable, if I'm a lender, I will perceive your risk to be lower, and therefore I may charge you lesser. Condition is a little bit something that you can actively control. Condition here refer to what is the market sentiments of the climate. So this is the reason we also try to educate. By the way, I write for Case Consumer Authority Singapore as well on personal finance. I don't think reviews website are in the best interest for borrower. I mean, if you are taking a credit card, sure, it's factual. 1 mile, 1 point, $10 spent, 1 point is factual. But I don't think anybody can tell you who is the cheaper loan. It's just like you go to get a renovation. Who can tell you IEM third floor corner, that one best renovated, or to come cheapest? Nobody can tell you that because every case is unique, depends on your 5 points. So condition is something that's constantly changing. Lenders will constantly assess their sentiments. Like for example, if you're from construction, you're from engineering, nobody can tell you how much you qualify for in advance. Maybe they can use some AI whatsoever to process faster whatsoever, but they need to have your data first. So unless you send your application through, nobody can tell you in advance. So review website, they tell you so and so give you the best loan up to 1 million, 1%. That may be true, but maybe that applies to 1 or 100%. So the best way for you to make sure that you are competitive in your business, you're getting the best loan for yourself, is to actually apply for them one by one or through using Find a Loan, and then you can send it to multiple lenders at once. Okay. And next thing you probably wonder is what are the type of lenders you can speak to. I think also another problem that business owner make is the only thing on banks. And that means you are losing opportunity to speak to more people who might offer you maybe more loans, not necessarily cheaper loans. Banks typically is fairly competitive. That is the strategy. Okay, I think in a nutshell, how you can separate between them is shy of you go and read the Money Lender Act, Banking Act, Hire and Leasing Act, and Finance Company Act. I think I would say you can roughly divide them into 4 categories. Okay, fintech lenders is technically an excluded money lender, but in this case, I should separate them because it's how they conduct their assessment, how they conduct their business. Okay, there are actually more excluded money lender that are banks in Singapore. Anybody here can tell me more than 12 lenders in? Put up your hand. On the back of your head, without Googling. Most of you all can't even think of 10 or 12, but there's actually more than 200 lenders in Singapore that can lend to business owner like yourself. So this is a problem. A lot of people don't know where to look, how to look. So our platform is here to help that. So I would say most of the time, you separate them by first whether where they get their fund from. Their lenders are in the business of selling and buying money. Buy from depositor, they sell to you as lower. So banks and finance company can raise funds from the public. The rest they can't. So excluded money lender means they don't even need to have a license. Okay, the banking act, all these license approved by MAS, a lot of time has nothing to do with the lending activity itself. Lending by and large is not a regulated business here. If not, you lend money to your friend, you are in deep trouble. You are alone. Okay, most of the time the license is them to receive money from depositor. So there are actually a lot of excluded money lender. However, the government do want to protect public, vulnerable groups, so they do prevent you lending to consumer unless you have a money lender license. So a lot of fintech, a lot of excluded money lenders are actually also money lenders simply because they need the license to lend to consumer and so forth. So this is different from 20 years ago. Along and whatsoever, money lender is regulated. This is in our law under the Money Lender Act. Since I think 1996, the government has decided that they can play an active role. So they are just merely a group of people who can lend to you if you are a sole prop individual. So that's different from Along, okay. And I think I should end off this with, I think, a rough summary. Okay. I think there's no one particular asset class as XRM. I think there's no one particular asset class that is better than the other. Likewise, I don't think there's one financing instrument that's better than one another. Each has its own trade-off. Each comes with its own pros and cons. So I will end off this with a slide that summarizes. If you need the slides, actually you can just scan the QR code, you can get a copy of the slides. So with that, thank you everyone for your time. Thank you.
Thank you. That was a very educational learning about loans. I realized why it's so difficult to get money. There's so many things that are looking at. Yeah, okay. I think Daniel's the expert. You must get hold of him.
If I may just add, I have a more detailed version of this on my company's blog up next week.
Okay, he's the man. He's not very available at the last week. Okay, we will have our last speaker. We have Lance from Bansi, Business Angel Network of Southeast Asia. Yeah, so thank you, Lance, our angel. Thanks to provide some money for some of our companies, businesses. Okay, thank you, Lance.
Thanks. Hi everyone. Like Sam, I don't have any slides, so I'll try to make it well. Pretty much very similar to what Sam has mentioned earlier. Our angels are pretty much individuals that invest in startups most of the time, and different angels look at different things. Some say I'm only interested in, let's say, industry, or I'm only interested in fintech, or I'm only interested in prop tech or something, right? Some are a little bit more agnostic. They like to invest in all kinds of different industries, right? But most of us, we invest in technology-based startups, at least from my understanding with the members of Bansi, right? So think of us pretty much like very much pre-seed, seed, very early investors. Typically, the valuations are pretty low, is much lower compared to what you see in these cases. But more often than not, you will also see angels co-invest with VCs. Right, so sometimes we have a lead VC that says, okay, these are the terms, this is the terms. you are raising 2.5, I'll give you 2 million, right? And then you have another 500,000, you have to find some way to get the 500,000, right? You can go to another VC, right? And they can say, okay, I'll provide you with the 500K or 250K or something. Or you can potentially go to angels. These are high net worth individuals, high income earning individuals, right? Sometimes angels provide strategic value. So for example, if you are in fintech, right, and you have a group of angels that come from, let's say, banks or financial institutions, right, they might be able to help you open doors. Right? Sometimes what we also do is we do angel syndicates, where we have a bunch of angels, we say, let's come together, right? We know the minimum check size is 250K, no way in hell am I going to give you 250K up front. None of us have the capacity to give 250K up front, just like that. So why not we create a company? All of us come in to this holding company, and then we hold the shares of the startup. So that's a pretty much an angel syndicate. Very similar. Think of it as a VC fund that invests in only one startup. And I think maybe I'll share a little bit about how I look at deals, right? Maybe that would be because, as I said, different angels look at deals differently. For me, it's very much around founders, right? It's angels, typically we invest very early. Sometimes the startup is not even 1 year old, right? And we're going in on blind faith, hoping that the founder will make it happen. So I think for us, very much is, can this founder, if you think about the entire Harvard framework, if you have heard of it, it's pretty much these 4 things that we talk about: U terms, business opportunity, founding/management team, and and along those lines, right? And financial statements and all that. So you have all these different things in the deal, right? Then it comes with financial projections, business plan, and all that. What I've realized from my own experience, maybe Sam has a different experience, maybe he can or he can share later as well. Most of the startups I invested in don't have the same business model 2 years ago. Right? 2 years after investment, the business model changed at least somewhat. So I think it's about how the founder navigates through uncertainty. It's about how founders navigate through the kind of, because startup is tough, right? So how do you navigate through the competition? How do you navigate through the potential where your technology could be obsolete, right? Especially in deep tech. And eventually, how do you make things work out, right? Get the right product market fit. How do you get scaling and stuff like that? And then get your VCs to come in, PE come in, right? If you need to venture debt, loans, etc., to come into the picture, grow the business to a point where it's suitable for a buyout or IPO for us to get a good exit, right? So I think at the end of the day, very much is focused around founders, right? It's always the same question: can we trust you? Based on your pitch, based on the due diligence we have seen, can we trust you? If we can, most likely you will get an angel coming into the deal, right? So I think that's pretty much what I have. And yeah, back to you.
So, how many angels are there in Singapore? How many angels are there in Singapore?
Honestly, we have about, I think angels, it's very hard number to quantify, right? Because every day you have new angels joining, going into new people going to angel investing, you have people exiting the angel investors. So I think maybe we were talking about, I think at one point we were saying that we were doing some calculations and we were saying about 1 in 100,000. Just in Singapore, 1 in 100,000. Right, at one point, and then I think in the US it was like 1 in 11,000.
1 in 11,000. But potential angel investors.
At least in Bansi, we have about 40 plus at this point.
Well, I think so, because there's multiple different angel investing associations and networks, and then also there's networks that come and go, and no one ever announces I'm no longer an angel. So also, what is an angel? So an angel is someone who invests $5,000 into one of their friends' startups, or is it someone who's constantly investing 25 to 50K tickets into half a dozen startups or 3 companies that startups a given year? So I think if you're going to draw the line between total angels and active angels, which could be more the latter. I think there'd be quite a large gap, and there's probably, I would say, yeah, probably 50 angels. There's some 50 angels, maybe close to a dozen, 2 dozen angels in Singapore that are actively investing in multiple regions in a given, multiple different themes in a given year.
Okay, I think we encourage more angels community to come up and join us. Okay, now I invite all our speakers to come to the stage. And we'll have a Q&A, where you can ask them any questions you like. Everybody on the team. Okay, so just moderate the questions, and also we can have questions from the online audience as well. And any questions you'd like to ask them, this is your chance to ask our panel in terms of financing. Anybody like to start with the first question? Not I have to ask them.
Online?
So guys online, if you have any questions, feel free to enter in the group chat. I will monitor that while we take the questions from the audience as well.
Hi, Jonathan. Thank you for the speech. Thank you for telling us a little bit more what you're looking for. My question is more related to for seed round, pre-seed rounds. What kind of ticket size typically an angel will or have there's some form of benchmark work typical angels.
I'll take it first and then ask an answer if he wants to. So the general advice that I would give, and what I have given to founders before when you're starting at the seed stage, is generally a couple $100,000, right? Ideally, you want to raise as little as possible at the early stage to be able to validate your product and get a reasonable level of traction that could then justify some high valuation. I think somewhere around that $500,000 mark, 3 to 800 is probably pretty reasonable. The reason that I would say this is because at that level, you can justify not having too much dilution, so giving the angel investors a reasonable valuation to get in it, to be able to take that level of risk. You also don't need to have a large lead investor to be able to anchor that round, because you'll get a lot of angels, you get a lot of angels, and they'll be like, okay, who's leading? Who's in the round? And unless you have someone who is anchoring it with, say, if we're talking about a $500,000 round, then ideally you want to have a lead in there with 100, 200,000. So unless you have someone in there with 100, 200,000, it's very hard to get the rest of the round to come together around that. So if you go out to market initially with $1.5 million at the seed stage, while that's like a laughably low amount in some other markets, like in the US, that's actually quite a challenging amount to get it together here, because generally if you're looking for $1.5 million, that means you're going to need to get a VC on board who's going to write 500 or more, 5 to 800 say. And it's actually quite hard to find VCs in the seed stage who are going to be able to take that risk depending on where you're at with the product.
So I think what Sam mentioned is very nice, right? What we see at these events is most of the angels, when you think about around, you're talking about somewhere around 300K. And then if you really see something that is a little bit more tech, then you're talking about somewhere around $500,000. Right? And then sometimes, most of the time, what we see is what we call savings. Right? So these are like pretty much convertible bonds. You invest as a loan, which converts to equity in a price round that is probably led by a VC.
Any questions? Maybe I'll just ask one to Lance. Where do we find angel investors? How can we find them in the industry? Or is it LinkedIn? Is it to the association? Or how?
I think there are a couple of ways, right? That some of them are, it really, like I think Sam mentioned earlier also. If you're talking about active angels, right? I think you can either go through like associations like Fancy, right? Or groups like us to kind of like reach out to angels who are a little bit more active, right? The other way is on
I mean, the other thing you also want to understand is what kind of angels are you looking for? Are you looking for an angel who is very hands-off, right? Who's just going to say, okay, you want 250K, it's 250K, that's it, right? Or are you looking for an angel that has a little bit more experience in the field, right? Let's say you are doing something AI, you may want to go for an angel network that is more driven by people who are in the industry, for example, right? So there's like XA network that pretty much sums up your MNC executives in tech. And then if you are looking for someone who is a little bit more founder / whatever, right? Then you may want to look at who are the angels who have been there in that kind of profile, right, that you want. So I think it really depends, right? There's associations, there's LinkedIn, there's within your own networks. Sometimes angels call out other angels, right? And say, hey, I'm doing this deal, are you in? Right. So
Can I say to that? I'd also say, yeah, like what is an angel, right? An angel could be anyone. So the best way to be able to find investors is to just start with concentric circles, just keep talking to people about what you're doing. Because then and ask them, is there anyone that you know that could potentially invest in this? Then you go on from there. Like last mentioned, you got XA, you got Fancy, you got Angel Central. I think if you were to put pitches in and reach out to those networks, they'd be happy to put you in touch with their members or the relevant members. Like I know for Angel Central, they send out an email every month to show the companies that have come into the platform. So that gets distributed to the whole network. So it's not too hard to be able to find angels. It's very hard to be able to find the right angels.
May I add on to what Sam has shared? I think it's very important, what Sam just said. Prior to doing findalone.com, I actually had angels who wanted to invest $250,000 ideas, no product, property tycoon. And I actually got to know him through a lecturer of NYP. I was working with, so what I want, prior to doing findalone.com, I actually wanted to build an omni-channel reward crowdfunding platforms, and that requires me to have a lot of designer, engineer, product, prototype, all this who want to raise funds through the crowdfunding platform. So I was, talking through the university, the polytechnics, and one lecturer loved this so much and actually introduced me to the tycoon, property tycoon. So definition of angel really very subjective because he has never invested in any technology startup and whatsoever, but he simply really loved my previous idea so much. But too hands-on, he needed every check that's $1,000 to have 2 co-signing. So he might put $250,000 with you, but I cannot touch it unless it's $939. So that is also another issue. By the way, great guy, not dissing him here, but sometimes we need to be, I think founders also need to understand the practicality. It's not just money. Half of the time it's not in Singapore, So anything that is more than $999, I would have to always can buy once a month. So even if I want to buy a photocopier, I have to wait 1 month. So these are, I think, a lot of things that I think a lot of founders forget. They are too anxious to, oh, I need the money, but they don't forget what happens after the money. So, and sometimes you might be better off not taking up it at all. I think it's very important to not just look at what they can give in terms of monetary wise. I think sometimes it's really important to get to know them as a person and make sure there's the correct chemistry. Yeah.
I think then again we talk about stakeholder management. So if you think about your angels coming in, right, you're essentially selling a piece of your company to them, right? It's the same thing as VCs, right? You sell a piece of the company to these guys, and the question is, can you manage them after that? Because now they are coming to say, hey, the quarter's up. How's the business doing? Right? Then you need to give them an update. And then after that, they will say, oh, I think you should go in this direction. And another guy will say, I wanted you to go in this direction. And then these 2 guys can't get out.
Yeah. They start meeting.
And then that's where the angels become devils. Okay. Yeah, thanks for those inputs and your personal experience, Danny. Anybody else any other questions? Yes.
Yeah, I have one. My question is towards the appetite of the investment community in Singapore. Seems like many people at this kind of event, most are keen to see or pre-seed kind of funding, 250K or 500K people. We want to go for like 5 million, 10 million. Seems like the type is quite low in Singapore. What would be your advice on which channel we should approach to talk to this kind of possible investor, maybe outside of Singapore?
Yeah, I'll start off and anyone can add on to it. I don't know if I'd agree with the comment because there's a C to A gap, yes. But that's more in like a couple hundred grand, maybe low millions into 3 to 5 million. It's quite hard to be able to bridge that gap in Singapore because you have a lot of seed stage funds, seed stage funders, you have angels, then you have some more developed funds, Wavemaker Jungle, like so these guys. So there are a lot of guys who have more capital. There's also like private equity options, you got venture debt here. There is quite a lot of access to capital. It depends on what kind of capital you need, what kind of business you're trying to build. And yeah, you can go offshore to be able to find that capital. But I think one of the problems you're going to come into often, so I was talking to a US investor this week, and that's a lot of US investors don't actually want to invest outside the US because there are tax implications on that. And the US market is big enough for them that they can get the right exposure there and they don't have to deal with any issues. I mean, I could tell you a hell of a story about a startup that I had to go and just clean up work on in Pakistan. I didn't have to get on the weapons here, and actually really dust people up, but it was pretty serious and that's pretty challenging when you're working in an emerging market. And as far as some US investors are concerned, they're like, so whereabouts in China, Singapore? So it's not a fair comment, but it can be a lot harder when you're going into those markets and trying to find capital. So I think best to find the right kind of capital that has the international connections here that can then lead you on. And this goes to, I think, what
my question is how do you
start with the investors here?
Yeah, how do you get to these kind of investors here? Because I've spoken to a lot and it seems like everyone is really interested. Pre-seed.
Maybe one of the questions that I would ask is, how far are you in your business, right? Are you, let's say, for example, generating, I don't know, let's say if you're talking about 5 million revenue, 5 million check size, you're talking about valuation somewhere around 25 million. So if you're looking at that kind of valuation, you're talking about, let's say today's market, you're talking about, let's just assume price of sales of 10, that means you're probably having a 3 million revenue AR, right? Recurring revenue, right? So you may want to take a look at where you are in that cycle, right? How much revenue you have, how much your product has been developed, your traction. I think that all affects a lot of these questions that the investors in Southeast Asia / Singapore would probably ask you. Then after that, if you have that kind of traction, then my suggestion is go to a Series A VC and say, hey, I'm looking for this amount. Because most of these Series A VCs actually have LPs in the States, in other markets.
They can't invest with the investors in the US too. They have the networks that will take you there. And there's not that many of those VCs. It's pretty easy to get those networks. I think it's more a question of whether or not what Lance is saying is, do you have the underlying fundamentals that justify the conversation? That's normally the short one.
If I may chime in a bit also, so Vegas is that we have closed our Series B part 1 recently also. And I think it's definitely not easy in this market, current conditions, right, to raise funds, right? And I think one of the key messaging has from the VCs has been, how do you show a path to profitability? And it's no longer the case about that windfall effect whereby you get a whole lump sum and then you're just going to buy away and burn it, right? So it's more of how do you create that sustainable growth? How do you show that you have a plan, you have a plan towards profitability? You may not be there now, but you have that plan, and that can probably help you in terms of convincing those larger VCs to invest in.
I think would be how you formulate your plan and how you're pitching your company is very important. VCs need to have a, 10x, 50x, 100x kind of return in their pipeline. And if you are growing too slowly, they know you will never meet that kind of returns. Yeah. So you might need to adjust your business plan. That's what we do. Incubator help you to adjust your plan and to see how you can reach that point. And in Singapore, it's really very, very small. You need to go to the bigger market where you have 50 million, 100 million, 200 million people with bigger chance of buying a product. Your growth is much more exponential in that sense. Yeah. So that's how I see we can, just have plans. Yeah. If you chat more, we can use it later. Yeah. Okay, you have a question from the gentleman at the back?
Yes, hi, Aaron here. Just wondering if you guys are also open to investing in like overseas businesses, or is your criteria that they must be a Singapore registered entity, or can we then register them as a Singapore entity, maybe joint venture with that or co-own the shares, and that makes the whole process?
Yeah, just not Pakistan, otherwise look, I think I was having this conversation earlier with Daniel, and I think most investors here will invest in the region. Depending on the country, it's definitely going to be beneficial having the company domiciled here. So for us, when a lot of the rounds that we do, especially if we're leading around, we will get them to re-domicile into Singapore, because then we can actually do something when the shares can. Right? We have a rule of law, we have working courts here, we can get something done if we need to. But I mean, there's a lot of opportunities in the region, and the problems in one country, or specifically, we're always looking for Southeast Asia first problems, right? Yeah. Things that are a problem in Southeast Asia might not be a problem in other parts of the world. However, that solution could then be exported to other parts of the world. But in saying that, there's also problems that might be specific to one of the countries, and actually the solution in Pakistan, the company that we've invested in over there, that is very specific to that part of the world. However, it could actually be probably applicable to the rest of the region here too. So yeah, I think you'd be shooting yourself in the foot if you weren't looking more broadly as an investor.
Well, can I add to that question? Is there any industry specific that attracts at this stage, I mean, flavor of the month?
Well, I'm handcuffed to fintech right now because we're a fintech mandate, right? But I used to be a just general B2B investor. I would look at anything more broadly. I actually don't even know what's hot right now. I don't go on what's hot. I normally spend a lot of time working with entrepreneurs to help them get through the earlier stages, then subsequently make an investment. And just going back to the question, the topic before about dealing with angels, I think that's a good way to do it, right? As people said to us, ask for advice, get money twice, right? So yeah, she gets some advice, she gets some help, and gets some cash out as well.
So I think talking about flavor of the month, right? I've heard a lot of companies doing generative AI. I've heard a lot of companies trying to do Web3 at one point. Not too sure how well it went. I've heard a lot of companies. Even now, I have companies trying to pitch me blockchain stuff, which for me, it's how does blockchain actually solve the problem, right? So at the end of the day, I think hype is one thing. At the end of the day, it goes back down to fundamentals. If you can't prove that the fundamentals will work out in 5 years, then no matter how much hype we create, at least my own 2 cents, no matter how much hype you create, there's only so far you can go. Okay, so we probably would say, okay, by this point we want to exit. So
yeah, if you don't exit on the up in a hype cycle too, you're screwed. I mean, you got to be doing something that you enjoy. I'm not trying to begrudge the question because I appreciate the question, but at the same time, it's just so hard. Because what's hot now, but it's probably not going to be hot when we actually need to think about getting an exit there. Yeah. Like I did invest in a blockchain business, which you probably all had some interaction with. Now this is accreditation certification. They've worked with APRA, most of the universities in Singapore as well. So like there are companies, they had a very specific business case around the blockchain thing. Yeah. Also there's a fintech business in the blockchain space too. They mentioned that blockchain, but it was on the 15th slide of a 20 slide deck. It wasn't the reason for investing. It was just, hey, these are the tools we're using for the solution. So as long as you're building a business that has the fundamentals there, who really cares, right? Like, and as long as you're enjoying what you're doing at the end of the day, I think that's the most important thing.
Okay, yeah, the reason I asked that is, just to give you an example, right? Let's say a business overseas is quite profitable, let's put it at 40%, right? But it's not a tech business, it's a mature business. But then therefore the quantum size that they're asking for will be roughly equal to a start Singapore, the amount that they want, let's say $500,000. But they are a more mature business, but because of the currency exchange rate, it's not big to them, but to you guys probably, but it's big to them. Right? Is that something that you guys would be interested in if they domicile in Singapore, or is that still a no because we scalability?
I'm going to jump on this one too. It has to have some kind of technical, I don't know if I like the term disruptive, but there has to be some kind of new angle there, because if there isn't a tech angle to it, then it's pretty likely that there's going to be very low defensibility in that business, no real competitive advantages there. So it's very hard to be able to make an investment decision there because it can be outcompeted. And so if you're saying 40%, I'm going to assume that's 40% net profit margins. If it's 40% net profit margins, then that to me, and there's no odds, and that to me suggests it's going to be a competitive way. It's probably actually an illegal business or something like that. Something selling fake sunglasses on Facebook. It's generally how you get those kind of metrics around. Or if it is truly one of those businesses, then it's going to be spitting out so much cash. Why would you want to raise external capital? And that's the question that I'd have to ask as an external investor too.
I think every business has its own frequency and rhythm. Each of the different funds, like Daniel has put out a very good matrix, is where you find the answer to manage. To me, actually, money, right, is tied to a kind of this term, cost of capital, right? So each one has its own, you must pick the right one that supports your business.
Yes, yeah. So basically for getting VC or angel investor to invest in my company, for instance, so do IES or whichever organization that you help with the shareholder agreement or constitution, in case like what Daniel has mentioned, okay, that we lose traction, lose control of the company, when I sign a check, I need a person or something like that, which one partner and the other partner doesn't agree with that. So we get angel investor to come in, who will be the one that helping us to defend or to plan the shareholder agreement, something like that. Yeah.
So that's where the incubate in Singapore, there are actually 200 incubators taking care of different sectors, and that's where the incubators, the mentors, angel investors who put a little bit of money in you, they will make sure you have the right agreements. Ultimately, we are here to create win-win for investors as well as the business, as well as to sell a product and service that serve the community, right? So as much as possible, we try to have trust and good faith in building that together. Having said that, a lot of things can be legally complex, so we must talk to the lawyers, talk to more experienced people who have done this several times and make sure the right terms are in place. And Daniel's practical part of it is learned through experience, probably as well, and share with you.
This is, I think there's a certain element of chemistry, just like Lance was saying, stakeholder management. So it's about whether do you want to actively manage that situation and negotiate. To be honest, I don't think it's non-negotiable. It's just that does it mean that do I have to wait 6 months to gain that trust with him? You see, there's no hard and fast rule. Everything they design ultimately is they want to protect themselves. They want to see an ROI. They want to see how you spend the money. And in this case, you see, because it's property tycoon, you don't understand tech and invested in tech. The whole reason he's willing to talk to me is because this lecturer helped to breach, and I think he was just be a little bit cautious. And given time, would I be able to convince her otherwise? Perhaps. But the fact that do I want to wait 6 months to raise, and thankfully I did, because what I wanted to do is omni-channel, and 3 months later, COVID happened. So anything in the store, even there's a tech component online, half of it will still die. So just like you mentioned, your platform, basically you don't charge broker fee. So how do you? Lender pay us. Just like lender pay their RMs, lender pay their brokers. Okay. So it's a free of charge, Free of charge for borrower to use, yes.
Borrower-friendly solution.
I mean, you think about it, no other solution they charge the seller. You don't go and buy a house, they say the property agent say I need to charge you first. You don't go and buy a car and then you only pay for that thing. You see, very strangely in Brooklyn, there's only like I can't think of too many other industries that they charge the seller. Yeah. And I think it is more equitable if we make it free for borrower to use. We generate volume. I think it's sustainable for just make the money from the lenders.
Can I ask you a question? It's just a quick question to angels. I mean, is there a way to work with founders like myself to strategize fundraising round pre-seed within the community? If is there a way of sitting down, analyzing where we're going as founders, and then crafting our strategic angels coming through that?
I think at one point we actually had this program with Harvard Business School where we're doing this thing called the Fancy World. So what happens is we bring in a founder, we bring in a couple of angels, and we say, hey, then the founder shares with us an idea, and then we kind of give feedback, and then we try to move the deal forward if possible. If not, we try to give some feedback to the founder so that they can work on the business plan. Then again, that's it. Different angels, different ways of looking at things, different requirements, so it's again the synergy, right? So I think these platforms like Banksy, Angels and Pro, XA, these guys are platforms to bring angels to founders. But at the end of the day, it's up to individual founders and individual angels to actually negotiate the deal. Right. In Banksy, we have Angel Central, they do syndicates. So we put in money into a VC fund. It's kind of like a VC fund thing where we invest into one deal as a group. In Banksy, we kind of created a micro VC thing where we had, I think, about 40 plus shareholders, right? All Banksy members at a 0 point in time. We put together about $1 million plus, and then we say let's do a couple of deals together as a group. I think then that's where you will see the dynamics change a little bit, right? Where it becomes a little bit more VC-ish, right? Because you go through investment committee and stuff. For angels, I think it's about expectation management as well, right? If let's say, for example, I look at your deal and I say, hey, I think I could 10x on this, right? Maybe I'll consider it. Because if you think about angels / VCs, you have a portfolio of companies. For it's a numbers game, right? So if you think about a portfolio of let's say 20 companies, you probably have a 10% success rate. So you need at least a 10x, right? For us to ensure that at least there's a capital preservation there. Anything on top of that is bonus.
I'll spend 20 minutes with you if you want. You can email me, sam@resolution.ventures. I'm probably going to regret this because now anyone can email.
Don't worry, we will have a conversation after
I'm going to get 20 minutes if you want it.
Well, I'm old school and I'm in manufacturing.
Okay, one last question. Anybody would like to ask? Okay, if not, I ask Marcus. Marcus, what is the minimum you need to be able to get a loan with Validus, for example, maybe as a basic loan?
Minimum
as in somebody who needs
Yeah.
criteria that they could access into Validus loans, for example.
So minimum criteria. Yeah, so I mean we give loans to everyone as long as you are located in Singapore. Yeah. Basically you have UAN, you can give loans to anyone. We have of course different sub criteria here and there, but yeah, we're open. We are not, we are not like being
Passive.
yeah, passive.
Flexible. But need some kind of assets.
No, so
collaterals.
No collaterals.
No
So
collateral.
basically we focus on two main things. One is unsecured working capital loans, right? So basically we give out a lot of small, let's say 150,000 loans to multiple SMEs. That's the first part. Second one is we do invoice financing whereby the content can be up to 1 million, whereby let's say if you have any reputable buyers and they take, let's say, very long to pay back. So you give us the invoice, we'll fund up to 80% of the invoice up to 1 million amount, and then you can get it in advance. So these are the two things that we specialize in at Validus.
Okay, thank you so much. Okay, we've come to the end of our Q&A. Thank all of you for being here. Please give a round of applause to our Today is part one of our event. We have part two coming up next month. So hope that all of you can continue to come, bring your friends. We will cover venture debt with Dr. Jeremy Low. We'll cover revenue-based financing with Percy Huang. We will have private equity with Grace with PI. Ants Capital, we have IPO with Jonathan Paul with from PIF. So invite all of you to come back again and engage our panel as well as network and help each other wherever you can to grow your businesses and be successful Singapore brand businesses. Okay, so that's what we are here to serve. So thank you very much.